Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Forgot. I set the thing on mute so I could blow my nose here. Wow. Good morning, everybody. Oh, man. Hold on. I have the speakers on. You don't need to hear that. I have it really loud, too. Turn that down. Hopefully it didn't wake everybody up in the house. Yeah, so I'm not 100% today. Oh, and we gotta turn the... Probably blew all your guys' ears out, too. Yeah, I'm just, I was sick over the weekend. I was feeling okay yesterday. I think I'm getting better, but, like, my system is, like, cleaning the last of it out. So, like, even though I drank tons of water last night, I am a little dehydrated, I think. And yeah. So, but hey, I'm here on time. So we got that, which is nice. Shall we see how we fared? I'm not 100% sure where we're at, other than that SpaceX was just going absolutely effing wild overnight. So let's come to the charts, see where we're at. Well, when you come and you look at the treasuries, they were mostly down yesterday. So I'm a little bit concerned that we're getting the deal and we're not seeing interest rates normalize. I wouldn't expect them to be as nice as they were back in like, well, let's see here. I think we might have to go back to February, March. Yeah. When we were really starting to get growth scare and everything. Okay, but maybe at least to April. Come on. But now we're just kind of stuck at the resistance there. I don't like that. S&P 500 looking pretty nice, though. It did well yesterday. Oil is continuing to drop in this session below $80. We got silver and gold. Just kind of maintaining their gains. Copper. Japanese yen. So we had an interest rate decision last night from the Japanese yen. I'm surprised that there's not more volatility there in the yen than that, but okay. And Bitcoin's doing okay. At least maintaining their gains around 6,600. So let's make sure I got everything set here well. With my volatility number and yep, okay. Coming back over here. Set up our levels. There we go. Wow. IQZ says Big Mike passed away on June 15th. Wow. I didn't know that he was anywhere close to dying. That's crazy. I wonder what's going to happen to the community there. They have somebody that's going to pass on to? Ah, that's crazy. When is it this thing that, like, when people in the retail trading community die, it's just like really sudden? Like, I'm really shocked. Oh, that's awful to hear. Well, let's see if we can get more snot out of me here, huh? The treasury is looking pretty quiet this morning. First 15 minutes here we've had, it's been stuck at this price, and it's been stuck at these prices for, I mean, you can see here on the chart, for quite a bit. And the volatility level is even lower than it was yesterday. So we getting some warning signs that it's going to be really tight again today like it was yesterday. And I think we should, you know, if I was looking for something, it's only going to be 1 or 2 ticks. All right. All right, blowing my nose. Not bad. All clear. All clear stuff coming out. I'm sure there's something big, white, orangey, loogie coming up out of my chest at some point, but it's not there yet. I think, though, I can kind of feel, I can kind of taste. Can you guys taste it when you're sick? Is that a thing? You know, like, when you have, what do they call them? Antibiotics. When you take an antibiotic, you can kind of taste the antibiotic. It's like you get these weird alkaline or chalky tastes. Well, I feel like when I get sick, sometimes you can taste it. And I can kind of taste that has gone. And now I have a more clean smell. Maybe it's just in my head, but that's how I feel. Well, I think, you know, and there's not a ton of news to talk about. Other than the stuff that we talked about yesterday. Is there a news story? I know. We'll come to Zero Hedge and check things out. World Cup. Dude, okay, so I am having a hard time telling how well the World Cup is going. Which is to say, like, are they making money from it? Because it seems to me that FIFA might have a problem here. Seems to me that FIFA might be realizing they make so much money from US soccer fans that they need to, like, revamp the whole thing to be more, you know, geared more towards the US. So that all they had to do was to put the match on Friday night, primetime Friday night, and it was the most watched US soccer game ever. It's just like the first round against a no-name country. So I'm kind of like, oh, okay. This is massive for US soccer. Not that I'm into soccer, but my dad was into soccer, so I know a little bit about it. But then you go on Reddit, and everybody on Reddit wants the World Cup to fail. You seen that? I'm getting coughing up a little bit, but it's not very thick. The stuff I'm getting from up here is really thick but clear, and the stuff that I'm getting from down here is a little watery and maybe slightly yellow. Anyways, the USA is doing well. Well, I mean, we won the first match, what, 4-1. So, yeah, I guess we're doing well. But I was looking at the schedule. This goes on way longer than I realized. Like, I thought that you would be doing a match like every other day. But when I looked at the schedule, the next, like all of the US matches were on Friday night. Like, there's not another one until this Friday. They changed it to 40. So you're saying that because it's 48 teams, there's much more time between matches? Well, anyways, so people were like, you know, is it actually selling well, though? Because they're not going to sell the tickets well enough, and they made the tickets too expensive. But then you get other people that are like, no, it's really, you know, even the small matches are really, really full. So I guess we will find out when it's ended, but it kind of sounds like a big deal for soccer in the US. Kind of seems to me. Maybe soccer, maybe Major League Soccer will turn into as big of a thing as, like, say, hockey. Hey, you know what? I feel like that we're kind of ripe for another major sport, because basketball is just ain't it right now, man. I mean, there was things about this past well, the Western Conference finals were pretty crazy. The finals were kind of like, okay. But there's still, like, a lot of flopping. They're kind of making the game like, I don't like watching it. I know there's lots of people that like to see any game get more physical. I mean, that's a great part about hockey, right? But it sucks in basketball, because then you see all these free throws. So you're just spending half your time watching people take free throws. That's not fun. And then you know, they can't call every foul. It gets so physical, they can't call everything. So then you're just always constantly upset about what gets called and what doesn't. And I hate that. I don't like that kind of feeling. As a Knicks fan, it was only good. Well, yeah, and then there was the whole thing about rioting in New York, like, after every game. Oh my gosh. That was crazy. I don't think that was good for the like, I kind of am wondering if interest in basketball is going to decline further. And they were talking about, like, oh man, I heard that they were going to remove charging from the game. So, like, if you're the offensive player and the defensive player has both feet firmly planted and you charge into them, then you get called for charging, offensive foul. And I'm hearing rumors that they want to get rid of that, which would make it even more physical. Oh, IQ, you haven't seen those new things, have you? So if you look over at my chart on the upper left, I have some levels marked out. And these levels are essentially determined by taking the at the money options and looking at what volatility level they are pricing, and take which will give you an annualized percentage, and then we're converting that into a daily amount. So this cyan line, so the gray line is the open. And you would basically, if you would expect it to be like an even day, right, then it's going to stay between the first cyan line and the first red line at the bottom, right? So it's going to start here. It'll go back and forth between this, right? But if it's a day where we just move up, then you're going to go, that amount is going to be this instead. So that's why there's a second line, right? So this is sigma plus 1, sigma plus 2, sigma minus 1, sigma minus 2. And we have levels for the extended session and the regular session. So then those get put on the DOM. It exports the levels, extended session plus 1 sigma, extended session plus 2 sigma, regular session plus 1 sigma, regular session plus 2 sigma. So you will find that the market reacts to these levels insanely accurately. Like, so much so that it's kind of insane that we ever traded without them. So if we were to move up, we're getting a little bit of an up move. I don't know. I still expect us to be stuck in a 6-tick range today. But if we get some upside, very, very good chance that we would go to the regular session plus 1 sigma, just because those are so close to each other. I would expect us to go to that 110.00 half, and that kind of be the stopping point. So it's when I say it's very accurate, I mean they will go and they will touch that line and bounce off of it to the tuck every session. It's incredibly accurate. And it's incredibly accurate on almost every asset. You will see the treasuries do it. You will see the equity indexes do it. You will see the dollar index do it. So are you long now? No. In fact, I'm actually... I still expect it to be a quiet day, but something's happening here. Something's definitely going on. Because some real volume popped out there, too. But that is enough volume to kind of have me, weary about trying to get in and chase. And it is a good change in cumulative delta, too. Well, I think overall my bias should be long. Because, when oil's coming down, we should see inflation normalize. I'm skeptical about how much we're actually going to get because it's a Federal Reserve meeting tomorrow, right? So it's going to be pretty quick. What's the indicator? Well, the name of the indicator, which is part of my indicator package that you get at speculatorseth.com, is called Daily Volatility Levels. So you can come in here. You can set a default volatility level that will get used in case it's unable to scrape it. Because we use web scraping to get that number. And then there's a factor. You can kind of change that depending on your opinion. But basically that is the square root of the number of trading days in the year, 15.81. And then there's this kind of little number here. You see how it says 4.79 and then in parentheses 11. This is basically 11 ticks. So you can change which way that gets displayed. There's a place to specify instrument that we use for the dollar index so that I can say what I'm using the volatility for. think on this one. Oh, that's right. I had to do a special one for the dollar index. Give me an example of what I would look for on NASDAQ? I don't know what you mean. You would put the indicator on the NASDAQ chart. So just as an example, here yesterday, right? We're gonna start. Here's a regular session. Here's a regular session plus 2 sigma. Very, very difficult for them to stay above it. This actually, so the way that you should read this, by the way, I said that it will go up to them like to the tick. Here's an example where they went through it, right? So will it happen that they will go through it? Yes. But what does that mean? That means that the market is performing better than what the options were pricing. So that gets kind of interesting, right? And that'll happen like, I don't know, 20% of the time. Something like that. But maybe if we go to the day before that. Okay, yeah, sure. Really good example. We get to the day before that, which we would expect to be a positive day, right? So if we expect it to be a positive day, we get to negative 1 sigma. Yeah, you buy that. Good trade, right? That price level right there gave you an awesome entry. So what was the trade? I'm expecting the S&P 500 to be positive that day. We are to the negative 1 sigma. I'm expecting it to either range between, the negative and positive 1 sigma, and maybe even up to the plus 2 sigma, right? So I'm going to buy it here, sell it here. You get full sigma range. That's an amazing trade. That's an amazing trade. You can see here in the overnight session, gets that plus 1 sigma, starts struggling. Plus 2 sigma here was, what day was this? Was this Friday? The 11th? Yeah, this was Friday. We had, well, this day was weird. This day was weird because we had the, I don't remember what the headline was at the end of the day, but anyways, right here is where the regular session starts. Plus 1 sigma, plus 2 sigma. Start struggling. I need a chart that goes back a little bit further to show you. But that's the kind of thing that you start to do with it, right? So, especially when you're getting into this kind of summer trading and you expect volatility to be relatively low, the market will respond to those levels extremely well. Extremely well. It's a good guide. And the way that I would, you can take it as like, okay, it gets there, it's going to bounce, or it's going to have a hard time getting past that, right? So let me come back over here. Another piece of advice, if you're going to use this, right? You would think, oh, okay, so once they get to this plus 2 sigma, it's difficult for them to stay above it. So I would want to go short somewhere up here. No. Because when you're outperforming volatility, sometimes they outperform volatility like super good, crazy. So what makes more sense is know which way it's going to go. You have all of your predictors of order flow, and you've, calculated it all that it's going to be a net buy day today in equities. And then you're going to take your profits at the plus 2 sigma, right? You buy it here, you take your profits here. Amazing trade. And then you're not stuck in this, oh, I don't know where to take profits. It always comes back on me. You know, you have this guy that, like, I bought it here, but then, you know, I tried to let it go and it didn't. And I thought maybe it was going to come back and it never did. And no. You're taking your profits based on what volatility is pricing. So you always get a pretty good exit. That's the best way to use it, as an exit point. So I was saying, here in the treasuries, if I think that we'll be constrained. I think I'm leaning long, but I think we'll be constrained. So if I wanted to be long right now, I would have my take profit probably at that 110 even. Either at the +1 sigma price or one tick below it. In this case, because there's a big round number there, I would probably have it below it. Actually, I don't know. It doesn't really matter. If we get up there, you're going to get filled at 0.005. But there's probably going to be a lot of volume in that area because of the big round number. Yeah. So this is something that, you know, we made based off of some stuff that Uzi had done. I was kind of skeptical of it because we have another indicator that's like this. But it just turned out that the at the money options was a much better measure of volatility than what I was using, which was basically the VIX. What's it saying today? Well, it's saying today that we're going to have low volatility in the treasuries. Right, that number is 4.79%. What does that mean? That means that based on what the options are pricing, you can expect to make 4.79% from buying and holding a treasury all year. That's like your expected yearly gain based on current volatility. So treasuries, when they're above 5%, we tend to get good action. When we're below 5%, it gets slow. And we're right there. We're below it. It's getting slow. Tomorrow, the number will probably be above 5% again because it's a Federal Reserve Day, right? So the options are going to be pricing higher. Reading through Zero Hedge, seeing if there's any interesting stories that I've missed. Oh yeah, so I was reviewing my branch last night. I made a couple of changes. Ran out of tokens. I need to finish that. So get that running so that we can pull up our new GUI here. Test that a little bit. Because it made a significant amount of changes there. We're going to have to test that. I looked through the changes as it was making them very closely, so I think that they should all be good. But yeah, high chance of an issue there, so I have to check. The thing that's kind of scaring me these days is that when I do Rust, hold on. When I have Claude Code doing Rust, it's very rare that it goes and makes all of the changes and it doesn't compile. It doesn't make mistakes where the compiler can't compile. So I suppose that's what you would expect, that because Rust has a really strict compiler, you should be able to do the reinforcement learning on it really, really well and get an LLM that writes the code very well and rarely makes mistakes. But it's kind of unnerving to me, because it's like, okay, is it really that good? Or did it just inject a bunch of mistakes in there that I can't see? It's a real, it's something that I'm really cognizant and concerned about. And I'm doing everything that I can to try and ensure that I don't fall victim to that. And it keeps going, like it builds, it works. Everything's going well, and I'm just like, it can't be going this well. It can't be that great. It's weird. Oh. Oh, good. It said, since you wanted to understand it all, and here's the explanation of all of it. Yeah, awesome. Geez, I just heard you get a new life. Wait, what? What? I get a new life? Oh, you're talking about the sound. No, it just means all of my Pokemon are healed. Yes. Do. So your Pokemon are healed. And that's, you just found a new item. Okay. Data's all loading fine. I can come in here and I can say run Python scripts. Very good. This one right here, the error isolation check is supposed to error. So it did. And it looks like the smoke tests are passing too. So everything is good. The changes at least didn't break anything. Then I need to come in here. When we get into like a 1 minute chart, it's kind of hard to see because I got this scaling on this one. But that looks correct to me. Oh, wait, where are we? There we go, yeah. Okay, yes, that definitely looks like what we're supposed to look like. Just making sure that the bars all look correct. I think it may have reintroduced an error. Yeah. Okay. Like, really, can you think of a better set of sounds to use for when Claude is done with something and needs you to look at it? Do I have one of, I do. Good. Oh, you know what? When I look at this one, they are correct. Is that because Ninja Trader doesn't track them live correctly? So where was I saying that it was wrong? I can't even see now. Oh, really? Okay, so like right here, that bar has a wick in Ninja Trader, has a wick below, and you don't see it over here. Right there, there's a wick that's missing. Oh, the whole time I was showing the wrong screen. Yeah. So it's getting the open and closes correct because that gets drawn from rhythmic. But there's like some lows in particular that you can see a wick in Ninja Trader and you don't see it on mine. So now the interesting thing, my GUI updates faster than the Ninja Trader one does always. And that interesting. I don't like the sounds of that. Every post replay bar stays trade derived provisional and never gets corrected, which would exactly produce missing wicks. I'm going to stop you there, Claude. I should say, though, it's not very many of them. Oh, I see. Something that might have happened is we kind of changed something with that interacts with the part that grabs from rhythmic. And so it's possible that changing that boundary kind of screwed something up. See if it can figure it out. This would be the kind of bug that would be really, really hard for me to track down, right? Oh, I love this. If you're familiar with the Primogen, I'd say he's the top programming creator on YouTube. Talking about AI. I use it likely more than you and more than everybody else. That is my last 7 days usage on Cursor. Input tokens? 1.2 billion tokens. Holy crap. Yeah, he uses it a lot. What the hell is he making? Wow. That would be, I would basically have to use all of my tokens. I think that I would have to have a $100 plan to do that. You should tell that to your subreddit, which has turned into a Luddite sect. Yes, it has. Almost everything that gets posted to his subreddit are anti-AI videos. I don't care about Reddit. It fucking sucks. A newfound respect for the Primogen. I love it. It's really simple. He has his AI prompting his AI and his AI checking the AI, and that's the AI prompting it. Suddenly 1 billion tokens is used and the person doing it feels like a genius. I mean, you're right that he's probably having the AI review everything, yeah. But I'm just thinking about how much actual code comes out of that, out of 1.2 billion. Because, like, if we come over here, oh, it wants to run something. I do status. Okay. And then I go to usage. Okay. Just in the past 24 hours, 420 lines. But where does it use? I thought that it would tell you like total tokens. Oh, here you go. Opus. Oh, 35.1 million. So Prime is doing let's just say 3. And then he was That's not actually telling me the full output. $4.3 million. Fable 1.2. So he's using like 100 times more than me. And I'm like hitting the usage limit. So like how much code is he generating with that? He's generating an insane amount of code. Granted, that's just here at home. I guess that's just here at home. It'd probably be a lot higher for me at work. You're using it all day and I don't have those limitations then at that point. Higher than you thought for yourself? No. I mean, I would expect if you're hitting the usage limit to be in the millions of tokens. You know, the interesting thing is the reason I hit the usage cap last night was purely from this code review. So, okay, let's see here. What's it say? Okay, so what's the most recent bar that is different? Let me restart. That way, like, all cache is gone. So it says that I'm getting the correct data. But we are getting from the same data source, so it could be an issue with my shim. Okay, but this bar right here is 717. Oh, wait. Did it just change? That's weird. There was definitely 717 and there was no wick. And now there is. Oh, wait. Oh, I see what's going on here. Okay, they do match. I just wasn't quite zoomed in enough. Okay, that is really interesting. That if I zoom out enough, sometimes the wick disappears. Huh? But that was something that I kind of knew was could happen, to be honest. Because I know that we hadn't built any of the logic into like limit how much you can zoom out. See, when you do that, it does this sort of thing. See how it kind of gets a little sparkly. And I think there's a couple of different ways that we can tackle that would be better than what the other trading applications do. So this is something that I've thought about and just haven't gotten to yet. But I didn't think that there was a problem where like a wick would, like one wick would show and the other one wouldn't. Including doing things like, what if I zoom out far enough that like each bar is only 1 pixel? I could use different colors to show the wicks instead. Things like that. So there's a bar right there that's a doji, and it disappears. It's a subpixel wick rendering case. Oh, it had that in it. Let's go back here. Okay. Let's see here. Refresh. Okay. I think you should hear me now. How are you guys doing? Can you see me now? It's okay. The important day is tomorrow. Yeah, that's the truth. Oh, well, we have to, let's, come back over here. Amir says yes. My application handles the reconnect decently. We should restart it. I'm a little skeptical here. I'm looking at the treasuries and I'm like, wow, there's not a lot of level 2 changes. Good. All right. Well, now that everybody's gone. Man, I don't think we've ever had a loss of internet like that on our stream before. I've definitely been like had the connection interrupted from time to time or whatever, but never like just completely dead. And I had to go in and restart everything twice. But it seems like maybe the first time I just didn't leave it open long enough or something like that, you know. Okay. Okay, so we should be able to switch over here. Well, don't worry, everybody. We're still gonna be here, even if there's just the real Amir. No, I'm sure everybody will make it back. So, Washington Congress on inflation said current Fed data that the Fed looks at is imperfect, and that he's not interested in a spike of inflation due to geopolitics, but the underlying changes. And the AI will lower costs, and he is worried of CB that does not see those changes coming. Yeah. No, I think he's totally right. So the measure of inflation that we're using right now definitely has some problems. I am not convinced that his alternate measure really improves things, because it is just like lagged. It's like an average, and it's more lagged. So I'm not sure I understand where the one that he's advocated for in the past. I don't know what he said in that congressional session, but what he's advocated for in the past, I'm kind of like, I don't see how that helps. I also think he's correct that you don't want to just say, oh, a spike because of geopolitics is 100% determines the interest rate, right? You need to see the underlying core inflation change, which is to say that like when you're looking at CPI, that core number matters to me, and I think to most people in this world, than the headline number that includes food and energy, right? That's why we have core, because we know that those components are more volatile and that they come back, right? But it does appear to me that to some extent it has fallen through into core inflation, right? So at this point, I think it's pretty clear that the Federal Reserve has to hold off on cutting interest rates. And that if they are able to cut interest rates, it won't be until the end of the year. And even then, I'm not convinced, because, you know, this deal that we got is just a deal to make a deal. And this could all fall apart in 60 days. I am seeing some people kind of make the narrative that, like, this is a strategic defeat for the United States and yada, 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 yada. And I'm kind of like, well, I don't think that you can say that yet, because we haven't made the actual deal. All this has done is make it possible for us to negotiate the deal. But saying that could make Iran be like, oh, we have the advantage, we should push it. And then that could prevent a deal from happening. and then everything falls apart again. And then it could be really bad if things fell apart in 60 days, right? Then the chances of us increasing rates like really increases, right? Okay. But the bigger picture is that AI is probably the most inflationary or deflationary rather. AI is probably the most deflationary force that humanity will ever see. So the bigger picture is, yeah, we should be concerned about deflation. It might not be for another year or two before we see that, though. Because the thing, well, first of all, we got the inflation that's kind of come off of this that does appear to have become embedded a little bit. And you're probably going to see some wage inflation as, like, when all this calms down. Like right now, I think companies are kind of like, just hunker down, let's survive this. After that, companies are going to be like, yeah, we need to increase people's salaries and all of these things, or we're going to lose our people. So you're going to see some follow through into wage inflation, right? Once all of that has calmed down, then there's this thing that like the efficiency improvements from AI aren't necessarily seen right away, right? So it might not be a year or two until you really start to see like companies negatively affected by AI going out of business, and that's deflationary, and with the real kind of cost decreases from AI come in, because right now AI is really expensive. So it'll take a little bit for the compute to get there and all that, right? But on a higher time frame, like 5 to 10 years, it's deflationary. I think so. So eventually, I do think that the interest rates are going to come back down to like zero. And then we're going to be in this really bizarre world where everybody is an entrepreneur. And I'm going to have the advantage, and I think it's going to be amazing. So let's see what happens. Huh? All sorts of crazy stuff could happen before then. So the place where I work right now is absolutely getting hit by the whole software as a service apocalypse, whatever, which is unjustified because we're like at the forefront of AI to some extent, but the business is not really benefiting from it right now. The market doesn't see it. So there might be another interim job or two before Seth is able to become the full entrepreneur he wishes he was. Is there any phenomenon that occurs in futures during triple options expirations? Well, so like on the day, I'm not sure that I can necessarily say that there's like a clear phenomenon that I can base a trade off of. But what I find tends to happen is you get pinned. There's a certain price that they congregate towards, and it's really hard to get away from that. And if something does happen, like we really, really fly away from it quickly. But I don't know, that happened last time. That happened last options expiration, didn't it? Oh, here we go. Well, our Pokemon are ready. I guess we got an hour. I can start another branch. Oh, oh my gosh. I thought that I had muted the microphone, but what I had done is unmuted the headphones instead. I'm sorry you had to hear that. I was like, how come I can hear myself on a delay all of the second? That's why I did it like 3 times, like What? Is that really come out of, huh? All that noise, not really that much came out. Yeah. Claude, chill out. I'm getting to it. Okay, so the wick scare, not a regression. It review fixes, man, it fixed a lot. Okay, I'll have it do its commit. I'm kind of getting into the point with my trading application where there's so many things that I want to do at once. Because I kind of started on licensing, but then, I switched over to this other branch and that went so well. And I think I'm so close to being able to put an indicator on the chart that I really want to just do that. So I think I will leave that and some of these other little things that I found along the way that we need to fix, that I've deferred. Like the fixing the candle wicks not always displaying correctly when it's on the edge case with the aliasing and stuff. Do you think quant will always be unattainable for retail traders? I think that's the wrong way of looking at it. Quant will always be difficult. I wouldn't say that it's unattainable for retail traders. It's just how much effort are you willing to put into it, right? Like the issue that we have. I'm gonna say mean things. I'm gonna say things that people don't like. Not necessarily that you guys don't like, but if the broader internet was watching this, they'd be like, oh man, that Seth guy, he's a total douche. I think that the majority of retail traders are not willing to put enough effort in to get successful at quant trading, because you've really got to be smart. You've really got to understand statistics and all of these things about markets. And if you were that smart, why didn't you go to school for it? You had that interest in it. Why didn't you go to school for it? There's going to be some people like me that you got into something else, and then this became an interest later on, and that's totally legit. There's not going to be very many of those. So, it's always going to be a very, very small number of people that are successful with quant trading. And I would guess, although I don't have any statistics to support this, but I would guess that the number of successful discretionary traders will probably always outweigh the number of successful quant traders. And the amount of money lost from unsuccessful discretionary traders will probably always outweigh the amount of money lost from unsuccessful quant traders, right? Because an unsuccessful quant trader usually stops before they actually get their algorithm to market, right? So that's kind of the thing. And the nature of it is that it will always get harder, or rather the quantitative side will always get harder. The discretionary side is maybe a different issue. I don't know. The things that kind of work for you on the discretionary side are maybe in some respects getting easier because the market is becoming less and less efficient and more based on flows, right? And until we get to a point where like people are complaining about that the transaction costs on index funds have become too high, and until you start seeing people talk about that, there's going to be a place for you to be able to come in and make money. So, and you could probably do that from both a discretionary and a quant spot. Although I think that from a quant spot, you don't really have the data to really make one of those effectively. I ask because I've noticed a huge wave of quant retail trader push, but it's not quite. Yeah, there's a lot of people that were suckered by ICT, and what's happening is those people are realizing that it didn't work, and the way that they're realizing that is by backtesting and by understanding the statistics and everything. And so now that they're there, you've got this cohort of really beginner quant traders that really don't stand a chance. Like their knowledge is so low that they're there and they're trying. And there's a whole wave of LARPing quant influencers to go along with it, right? I honestly haven't been thinking about it as much or in the same way as I used to. Right? It used to be like it would just really annoy me that you get these influencers that are just, really have no clue what they're doing and are just kind of riding the wave, and people believe them. The things that they do to get people to believe them is just wild to me. And the people that have been around for a long time and have the experience kind of get ignored. But more lately, because I've been focused more on my platform, I don't think about those things in the same terms, because I'm kind of like, well, yeah, but those are the people that are going to promote my platform. Because we're making a platform that really enables you to do more sophisticated stuff in a way that the other platforms don't right now, and that you really kind of have to do it in raw Python right now to really do, and then there's disadvantages to that. So having a full retail platform that really gives you that power, I think, is a big step up. So, and I wouldn't say, I still don't think that the way to go is to just go pure quant, right? There's issues with that. So I still think that you can have a mix. You use our platform to do your research and to get some of this information that you really need machine learning algorithms to be able to sort out. And then you're also going to combine that with the information that you know about the market and discretion and everything. So not only will it be a platform that will be more powerful for quantitative trading, but it will be a platform that allows you to combine the two together more effectively. Okay. So, oh, it's only 8:04, so we still got some time. Now let's see here. Get my pushes. Yeah. Okay. Merge commit. Merge back into main. It's called main, right? Yes, it's called main. And delete branch. I'm pretty sure I finished that one. So, okay, new branch. Mm. Let's see here. So I was doing an indicator. A simple moving average is something that you put on the main chart. So what would be an indicator that shows on a sub-series would be the simplest, most simple indicator we could put on a sub-series?
I think I finally blew my nose too much and made it bleed out of this side. I was getting it out of this side, getting it bleeding over this side a few days ago, but now it's this side. But we'll be okay.
I think it's almost stopping, but we got a little bit more here. Always wondered if software that aggregates Bitcoin order. Oh, absolutely. There's platforms that do it. Okay, I think the bleeding stopped. I'm gonna go and clean up a little bit. Okay. A fragmentation of exchanges, platforms that aggregates it. Yeah. We could do that. I guess it'd be like the whole thing is like you would need to have an account with each exchange and be grabbing the data from all of them to put all together. But you know what? I'm personally not convinced that that would actually do a whole lot for you, because you get these robots, right, that are seeing the changes on all of the exchanges and like arbitraging between them and everything. So if there was a big order on one exchange, you're going to see it reflected in the order flow of the other exchanges. It might just be that you're going to see a huge market over here on this one, and you're going to see all of the algorithms adjust their bids and offers over on this one. So you might not know where it came from and all of those sorts of things, but with enough experience and everything, and you're on I'd say you're on coin. What is the name of the big exchange? Coinbase or whatever it is, right? You just need to be on the biggest exchange, and that's probably going to give you a good enough view of what's going on. No, not Binance. The biggest US exchange. Binance, yeah, Coinbase. Binance is only the largest exchange from fraud, as far as I understand it. If they had all of the same rules that Coinbase had to put up with, they wouldn't be as big. Sorry, you have to see a little bit of blood. Yeah, edit that out of the video or something. Part of me is like, oh, you should turn the camera off. But then if something happens, I guess my wife's in the other room, so we're fine. But no, I need you guys to see me pass out if I'm not anywhere close to passing out. But if I did pass out, it would be all in my head, not because I lost too much blood. Allergies? No, I got something. I actually think well, so it kind of started in the throat a little bit, and then it turned into like it started to go into the upper respiratory, but it never got super serious up here.
Yep.
Anyways, it never got too serious up here. And it was only Saturday, Sunday. So, like, the stuff that I was blowing out of my nose was almost always clear. But it was getting really thick. So, like, yesterday, this right ear was, like, plugged all day. Because it was just, there was some stuff kind of stuck up there, I guess. That's why here, when I was blowing my nose and I could kind of feel a little bit on my right side, I was a little excited. I was like, oh, it's finally coming out. And it did. Some did come out, but then I guess I blew too hard and yeah. Anyways, but then, you know, I thought I was good. And yesterday, after I came home in the evening, I was still coughing up a lot. So I think that it may have started to switch over into like walking pneumonia. But this morning, I'm not really coughing much of anything up. Try coughing to see. That doesn't sound good, but nothing's really coming up.
Block cell.
So I think that even the walking pneumonia is probably, the system has handled it pretty well. If I get like a fever in the next 3 days, then we know what's going on there, right? But I think we're probably okay. So, yeah. Better than trading blood. Yeah, but I do get allergies, though. I get really bad allergies. That's actually one of the... Okay, the thing that really irks me is that I, like, never get sick. I never get sick. But to deal with the allergies, I take, you know, antihistamine medication, and that makes me get sick more often. So I kind of like, if I'm feeling okay, I stop taking. I think after, you know, and when I feel myself start to get sick, I stop taking the allergy medication so that my immune system will pick up and take care of it. But I'm feeling okay after this. The allergies aren't too bad, so I might go back to not using it. We'll see. The thing is, it turns out, well, the two things that I'm most allergic to are dust mites and dog hair. Or at least not that I'm the most allergic to, but that I deal with the most. Man, spoos are not happy. Did I miss something? No, I don't see any major headlines or anything. So I guess they're just turning down for turning down's sake. Okay, so what we're doing... Oh, yeah, I was trying to figure out what would be the best sub-series indicator. Cumulative delta? Sure. Okay. Let's see how it does. I'm a little worried that on the indicator spot is where the LLM will start to do dumb things that I don't like. So, see how it goes. Because the way that you have to write the indicator in Python really matters to me, right? Like it has to have the right API and everything that is really easy and makes sense to people and is all that sort of stuff. And if it just kind of goes through the like what's out there or what's easiest based on the existing code, it might do the completely wrong thing. Plus, this is probably going to be a relatively large lift because we've got, all the drawing code for the chart, but this is going to be drawing code for an indicator and, an overlaid indicator. So that's drawing code. And then it's going to have to be based on the data series that Python sends it back. Or do you make something where the Python can send drawing calls back? That way you could write your own footprint chart in Python for it. Right? That'd be cool. But I don't think we're gonna do that. I think that's much further away. Man, the place that I was bleeding out of on my nose is the worst place. That means that me cleaning it up there probably made it worse, huh?
Oh yeah, I just got blood all over my leg. Oh, fuck. Oh, I love this shirt. No. Well, I'll let Claude go there and I'm gonna clean up.
All right. Well, I need to just not touch it. I tell you what, though, that was like, this is like the worst session we've ever had. Bloody nose, and my internet went down in the same stream? Plus, I got it all over my shirt. You saw it, right? I may have to take the video. Does YouTube have... I don't know. We're going to have to take the video down after the fact. And I need to just, because it was me going in there and trying to clean it up because I don't want a bunch of, blood in my nose. It kind of made it start up again. So I need to just not touch it. I think it's fine now. I got a spot in my nose. It was kind of like where I had surgery, where like the blood vessels are close. That's why I was like, this is the worst place to get it. Because I've had bloody noses there where it's like, just getting in the shower will cause it to have a bloody nose, which is the worst, by the way. Let's see here, though. Oh, well, while that all was happening, it looks like the S&P 500 is recovering. All right. Mm-hmm. Have you ever used I've not. I've seen some studies to suggest that some algorithms can be more effective with MBO data, but it was kind of like on the edge, and so I'm really skeptical that it really would provide an advantage from a discretionary point of view. I do want to have MBO data built into our platform for the people that are willing to pay extra for it. But as far as like data agreements go and all of that sort of stuff, that's going to be something that's going to have to come a lot later. Trying to bootstrap this as much as I can, but there's going to be a point at which, that won't be practical. We'll have to put money into it. So, although yesterday when I was asking, I asked ChatGPT, okay, like what would a realistic funding scenario for something like this look like? And I think that the numbers it came up with made sense, but it was also like, oh, you can bankroll this. And I'm like, my first thought was like, no, I can't afford that. But then I was like, actually, if I really put everything I had into it, it would be like a huge personal sacrifice, but I could bankroll it. So I'm not quite sure where it's going to go, but the MBO is probably not going to be a day one feature. So something that I really like here is that the LLM seems to understand extremely well why what I am doing is powerful. They'll say that indicators are a checkbox feature that you bolt a scripting hook on, ship a moving average, and call it extensible. The thing that makes this not a checkbox is that the indicator is arbitrary Python with the whole scientific stack behind it. The chart is a GPU surface that already draws from a columnar series of record, and the only new surface area is the seam between them. Get that seam right, and the indicator stops meaning the 5 we hard-coded and starts meaning anything you can compute. The two examples are a moving average and a delta line precisely because they're the boring base case. If the boring case is clean, the PyTorch regime classifier overlay is the same 3 API calls. Exactly. But what does that seam look like? Okay, that's correct. Oh, okay. I was like, why are you describing more about why? Oh, because this is what this unblocks. I don't know if that really matters for the plan for what the LLM is going to do when we code this, but it's fine. Okay. Correctly understands that the layout, like adding a subseries, is a significant change to the renderer. Mhm. So I'm already seeing it's putting some data you know, kind of proposing some data structures. I already see some issues in there. Just a vector of floats I don't think is going to do it because you might have multiple things looking at that, right? So they put an arc on the string, but not an effect. Okay. Kind of losing focus reading this, but still thinking about having a bloody nose. Man, it's gonna mess with my head all day. Because I'm gonna be afraid, like, if I blow my nose or sniff it wrong, it'll come out and I'll start bleeding again. By the way, I just want to note on the E-mini, because they were dropping pretty hard at one point, never really got all that close to the volatility levels. So I don't know if that means that this is kind of a nothing burger or if there's going to be a little bit more selling that'll come through here. But I got 75.92, 75.90-ish area. And since the extended session and the regular session opens were close to each other, probably just take the one that's a little bit further. Wheat is up 1.65% today. That's unusual. And oil down 5%. Bitcoin down 1.31. It's actually mild for Bitcoin.
Mhm. Mm. Mm. I'm just having flashbacks to when my nose was bleeding and like I let it drip all over my shirt. Like mistakes were made there. I should have just like immediately, oh no, you know. We didn't have to go through all that. Well, I'm sorry. I'm reading here and everything. There's a lot. I'm gonna have to go back and forth on this plan with the LLM. Maybe start it fresh because there's a lot of things about this one that I don't like. So yeah. But it's time for me to get going. So I will catch you guys tomorrow for the Federal Reserve meeting. Well, I won't be here for the meeting, but in the morning. In the meantime, stay excellent.